Hey Nick, good to see you. Today we have a very important topic. We are talking about how geopolitical events affect the market. Of course, we're talking about the tension with Russia right now. US equity markets are lower as investors try to determine how Russia's latest moves will affect the global economy. Investors are pulling money out of stocks and into traditional safe havens like gold and bonds. But we've talked before about how bonds have not been performing well this year. How are you advising clients if they want to invest safely right now?
Right. So the first thing that we're really talking to clients about is having a well-diversified portfolio. Not
Mhm.
all of your eggs inside of an equity basket or not all of your eggs inside of a bond basket and stuff, but being able to have that correct mix. And the question is, what is the correct mix? We've talked about in previous videos, is the traditional 60/40 portfolio going to be viable into the future as interest rates start to rise and bond values fall because of that? So what we've been doing is taking an active approach to mitigating some risk here in the short term, but still looking at this as a long-term event. Even ever with all of the geopolitical events going on in Russia and Ukraine right now, we're actually seeing the markets, kind of tick up here after the initial fall that happened on Thursday, the 24th. We started to see markets climb back, and then again, today we're starting to see those markets pick up again as more peace talks are coming to light and as countries open up to those as well.
Right. So let's dive a little deeper now. You are surrounded by a team of experts, and that includes Brookstone CIO Mark Diorio. He actually took the time to crunch the numbers from some other geopolitical events. Take a look at this table, Nick. I know that you've studied it as well. But basically, statistically, we can see here the average 1 day decline to other geopolitical events, negative 1.14%, with a total event driven drawdown of negative 4.39% over 16 days, then recovering in an average of 35 days. I think that when we think of these headlines, we think it'll have a lasting impact, but that's just not what we see here.
Yeah, as humans, we all have short-term memories.
Right.
When we look at what's going on currently inside of the world, it's always worst case scenario. We're trying to protect ourselves from that storm really impacting us. But as you can see here, looking at past history, that storm may seem very difficult while we're inside of it and going through it. But long-term wise, it probably doesn't have as big of an impact as what we've initially, thought it to be. So
Mhm.
we have to continue to have that long-term outlook on things, but still try to mitigate, some of the risk here in the short term.
Of course. And so I think you're hitting the nail on the head. We have to stay disciplined in our long term strategy. And if we invest or react emotionally or try and get out on what we think are those down days, then we miss out on the best days.
Exactly. Some of those best days happen after some of the worst days
Right.
in the market. So we don't want to all of a sudden make a knee-jerk reaction and pull all of those assets out and then miss, that rebound that happens. That happened back in 2020. The worst recent drop that we've had in 2020 was over a 30% drop, but most of that market rebounded within the next 3 months. For those people that pulled money out of the markets and didn't get back in at the right time, missed out on that rebound and cashed in on that loss.
Right, absolutely. And I think, it's interesting to think that just missing 10 days can dramatically affect how you're invested. Well, Nick, this was very helpful. And I'm sure that a lot of people, though, probably have a lot of questions right now, which is totally appropriate. And it is your job to be there for them and talk them through what's going on. If they have any questions, what's the best way to reach you?
Absolutely. You can either reach us by our website. You can schedule an appointment if you'd like to do that. Otherwise, give us a call. Our phone number 937-498-1128. We're here to answer those questions and to ease that mind. Like I said, we have to have that long-term outlook on
Right.
things, and that's what we're here for is to walk people through that.
Absolutely. All right, Nick, thank you.
Thank you.